Now it's time to get on this Tuesday an in-depth look at markets around the world, including Korea. And for that, I'm joined on the line by Mr. Daniel Yu, global strategist at Kiwoom Securities. Mr. Yu, thanks for coming on today.
Thank you for having me.
So a global headline, U.S. stocks got slammed overnight. The Nasdaq down almost 3.5%. The other two main indexes down well over 2%. Obviously, this is the U.S. China trade issue. What are investors thinking out there?
Sure. As you said, the global market panic continued. The main reason for that is because after U.S. raising $200 billion worth of the goods tax tariff rate from 10% to 25%, China also retaliated, and they have announced that they will raise taxes on $60 billion worth of goods from U.S., including the agricultural products. So because of that retaliation, most of people are concerned that the U.S.-China trade war might continue for a long period of time. No resolutions on site, and that was the main reason for a significant drop. However, though, the Chinese market today fell slightly less, only about 0.7% level, as well as the Korean market rebounded. The Kospi was up about 0.14%, and Kosdaq was up 0.19%, thanks to the institutional buying happening. Main reason for that is because the continuation of the talk between U.S. and China will occur, and also that Trump mentioned that they will meet on the G20 summit, and also a lot of the negotiation can be done before that summit meeting of G20. So I think people are having a little bit more hope than last night because of some of these announcements that made by Trump as well as from the China side. If you look at the China side, they also talk about the peaceful resolution can be happen, so they have not given up on the negotiation.
Interesting points. Well, if nothing changes, though, the Chinese tariffs will take effect on June 1st. And with stocks down so much already, though, is this the end of it? Or if not, when do you see things stabilizing?
Right. We estimated on the day when Trump tweeted on May 5th, Sunday, saying that he will raise the taxes, we estimated that the correction would be around 5% of the global market. In case it worsens, then it might go down by as much as 10%. So far, if you look at it, Chinese market fell over 10%. U.S. market also fell more than 5%. Global market in general, total fell over 5% level. So already most of the concern with the taxes with the 200 billion going up to 25% has already impacted. However, though, whether or not, the key question is that U.S. will impose another taxes on additional 300 billion worth of goods, which will affect negatively on inflation numbers for U.S. I don't think that this will actually happen, but people are still worried. And if this fight lingers around till the end of the year and the additional taxes are actually occurring, then we think that the global market might fall another 10% to the end of the year. However, though, we don't think that this will be actually happening. We think that by sometime end of the first half, we will see the signs that the negotiation will be made. We think we need three things for the market to go up again. Number one is any type of news of rate cut. Number two is any type of news regarding to the trade agreement between two countries. And then number three will be the economic leading indicator bottoming out. We will see some of these things will happen over the next couple of months. And if that's the case, the correction should be handled, and then the market will start to go up again in the future.
Got it. Well, bringing things back home here, the Bank of Korea has released some new figures on export prices. The index for April up 0.5% from the month before, the third monthly rise in a row. On the other hand, though, semiconductor prices, one of the main exports, are still falling. What's going on there?
Right. As you see that the export price index are rising because the oil price has been going up in the last several months from as low as below $50 level to now about over $60, $61 level. The petrochemical product prices goes up with the oil price rise, and the Korea's export total, out of the total, about 20% is related to petrochemical products. so that the price going up does have a positive impact on the export price index. However, though, the DRAM prices continue to fall because of the worries of China demand with the U.S. China trade war possibilities, and also the concern about the handset-related demand being weak going into the future. However, though, most likely that export prices in general will go up because DRAM price falling should stabilize sometime in the second half of this year, because we think that data center demand and also AI-related demand will pick up significantly in the second half. So the price should stabilize gradually throughout this quarter, and then starting next quarter, which is the third quarter, we think the price should go up slightly. Also, Samsung is planning to invest 133 trillion won worth of non-memory semiconductor business. So we think that the price related to this, especially the semiconductor machinery prices, to go up in the future. So all in all, we think that the export prices should be fairly stable in the future, and particularly in the second half if there might be some recoveries.
All right. Well, Mr. Yu, that's where we'll have to leave it today. Thanks so much for your insights, as always.
Thank you very much.